दूसरा नया लिंक बनाया दूसरा ये लिंक शेयर करो ये वो लिंक दे दो मुझे
नहीं मेरा पीपीटी नहीं है मैं नाम Good morning, gentlemen. Good morning. So this is a formal welcome to ITM University Raipur, and thank you all of you for showing up today. Although the small numbers, but this just is the start of what we are trying to do. So I still remember that just to give you a context, with some of you I have shared how I met Divya and why this happened today. Is I did a study on women as independent directors, and Divya happened to be one of my respondents. And we talked about women on board, and we remained in touch for almost 5 to 6 years. And as an outcome of that study, I used to attend Mentor My Board events. And last month, I met her in an event where I asked her, if you're doing roadshows across the country, why not in Raipur? And she said, surely. And 10 days back, she spoke saying, I'm coming to Raipur, can we do this? It was a short notice. We tried getting people. And there are people on the way. They are saying 3, 4 of them, they are still on the way. They are saying it's taking time for us. So yes, whoever showed up, thank you for being here. And we are sure that this is going to be an interesting conversations that we will have today. Can we, before we start, can we take the blessings of Lord? Please. May I request Sandeep ji, please. Thank you. Yeah, so for all of you, I
Raju
had
sir.
the privilege of 1 hour masterclass for the kids. Thank you, guys. Sridhar sir? So Sridhar, first time we started a journey a few months back with the consulting project. What's that? So, on my one request, Lakshmi said, yes, let's do it at ITM Raipur. So, thanks for arranging everything so perfectly. And look forward, this is just the beginning. We have to do a lot of things together. So, yes. Okay, let's begin. Lakshmi, you have anything? No, I. Okay. Yeah, you can start. Great. First of all, thank you so much to everyone for being here, and special thanks to Bombay Stock Exchange, Innovate Capital, for making it possible, to reach to the city of Raipur and join hands with us to create this awareness on IPO readiness. And it's not a only IPO, story. To reach that IPO story, there's a lot of hard work which goes before the IPO even is, the seed of IPO is even sown in the minds of the promoters. So good morning everyone, and it's a privilege to welcome all of you to this IPO readiness and growth masterclass. So we're going to talk about growth, the challenges of growth, the opportunities which are unlocking when you are in the messy phase or the growth phase. Let me begin with a simple but powerful shift. Now, India is no longer just creating businesses, it's creating wealth today for people. Now, over the last 1 year alone, India has seen more than 300 IPOs which have raised close to $19 billion rupees for $19 billion, for the Indian economy overall. And this is just a structural shift. And what's interesting to know is this wave is no longer limited to the bigger cities. Smaller cities, regional companies from regions, are going, and we already have a lot of companies in Raipur also which are listed, and and then few are in the pipeline of getting listed. Now let me take one clear example from this city itself, that is Panorama Industries, a company that raised around 64 crore through an IPO in 2018. And the market value or market cap of the company is more than 9,000 crore. That is wealth creation. And I think it's a journey of consistency, journey of transparency, journey of showing up, the right talent, the right leadership, the right governance structure to the corporate world, and that's where the real wealth for the promoters gets unlocked. Now we believe that companies scale with capital, but institutions are built with governance, and I think that's where role of Mentor My Board comes into picture. We work with boardrooms, we work with promoters to bring that shift in the entire organization, and that's the cultural shift which happens from the top. Now, because the future will not only be, the fast-growing companies, but also it will belong to the best-governed companies. And the world is looking at India. India is the brightest spot in the global, ecosystem today. So how things are going to change for India is something, and I'm going to talk in my presentation something called the fish rots from its head, theory, and how we have to protect those minds and those heads. Is that what I'm going to talk about in my session later in the day? So we have a lot of interesting sessions where Sridhar sir is going to take us through the growth phase, the challenges of growth, some stories, where he's been turning around the companies, his journey of turnarounds. Soumya will speak about the investors, how the investors are looking at the company. What is the information that investors demand? What are the ways the capital market is looking at the company? What are the expectations? And I'm sure, Sandeep ji from Bombay Stock Exchange will speak about the process of going for IPO, the nitty-gritties, the compliances, the check boxes, which needs to happen once before you hit the bell. So it's going to be an interesting masterclass. Stay tuned with us for the entire day, and I'm sure there will be lots and lots of takeaways. Any questions we will be, taking up, at the end. Again, we are going to have people from Manorama Industries, Ashok ji and Deepak. They will be speaking about their journey of IPO, the way they are looking at, Manorama, what is the advantage, they have got after getting listed, and how it has really been a journey of, from a family business, family controlled business to an institution driven business. So it's going to be interesting session. So let's start this session with a big round of applause to everyone who's been here today. And I'm sure, because a lot of people are watching us live. So good morning to everyone who is joining us live. And I'm sure, people from Mumbai said that why don't you hold these kind of programs in Mumbai? I said BSc is in Mumbai, Mentor My Board is in Mumbai. So we keep meeting. But for us to come to the cities like Raipur, we have done in past the IPO readiness programs in smaller cities like Aurangabad, Nagpur, Jalgaon, Nasik, and we have got huge response. There is, there is, ample opportunity. The promoters have the passion, but some things are there which are missing out to make them open up, their companies to public. I think that's what is more important, and where, Soumya, Sandeep ji, Sridhar, me, we are going to make sure, or take our efforts to bring out those hesitations, see what can be done to address them throughout this masterclass today. So with this, I would take up the first. Yeah, the first session which we will have is by Sridhar Ramchandran, and it's immense pleasure to introduce him to all of you. He is the cost accountant, chartered accountant, US CPA, and most importantly, the advisory board member and chief mentor of Mentor My Board. We've been associated with each other for past almost 6 years. He is the one faculty for a lot of our WOM programs, Women on Management and Boards, which was launched by Finance Minister in 2022 for us.
So we do a lot of education for the board level people, especially the promoters, founders, independent directors, women directors, and how the boardrooms are a very important tool of decision making, which can lead organizations for, they prepare organizations for the next level of growth. So with this introduction, and I think most important introduction for him is he's a turnaround specialist who's turned around businesses worth 20,000 crore in India, in past few years of his corporate journey. A private equity guy, by heart, and the operations guy by mind. I think the way he looks at, the business, the factory, and the way he handholds the businesses, I've been working with him very closely. And I can say very, very few people in the country I've seen who have that passion and, to build those businesses, the entrepreneurs, the promoters, to completely shift the mindset and build a stronger culture of the organization. So with this, I request Sridhar sir to be here with us and take the session. Yeah.
There are about 10 people already online.
Yeah.
Online. So the word is spreading now.
Yeah.
There's someone from Calcutta asked for it.
Good morning.
Good morning.
Nice to be here. I love Raipur since I started visiting from last year.
Yeah.
It's a quiet town and it's vibrant people. Now I think getting busier. The traffic is getting as worse as Bombay in the evening. That's what I see. Am I right?
Yes.
Good.
Some pockets, yes.
That shows that there is a development happening. Thank you, Divya, for a nice introduction. Lakshmi, thank you for inviting me. We are talking about Chhattisgarh has got 4.5 lakh of MSMEs. 4.5 lakhs. 97% of them are micro. And this is a huge opportunity where certain inputs can unleash the potential of these MSMEs. So the problem lies is not about the intention. The problem lies about availability of certain ideas that you need as and when you need, and that's where Meta My Board helps. We are not just consultants. We are not consultants. We are not. I'm not even using the word just consultants. We are not consultants. Okay. So what happens when you run a business? I spent about 18 years in different countries running large businesses, right from polyester to textiles to automotive to engineering, then into investment banking. All of that taught me. I've met in India about 1,600, 1,700 promoters myself across India. Now, each one have a story. If I have to write a story about each and every company, it will run into thousands of pages, right? So, running the business. Are you running the business? The most important question. Are you running the business or you are being run by it? It's a very important question. A lot of hard work has happened until now, from the time you conceptualize the idea of business, brick and mortar you have spent, you have put all your household money into running the business, you had a vision, you want ambition, you wanted to do that. But after a particular level, you are in a position not able to take a decision, how to go forward, right? So our approach is that no promoter should be left out bereft of that knowledge that you need. That's all. We are just not promoting anything. We are just ensuring everybody has an opportunity to have an ideas that they can exchange and have mentors that they can help them with. If I take 5 companies, one pattern emerges, right? We have very accomplished academic professionals here who are doctors, research professionals from ITM. And these are things which they would have done academic research in their own projects. Now, what we see is many promoters after a point of time, I say, I am tired of being chased my own business. Right? I always have a very crude way of saying many of the SMEs are unpaid employees of the bank.
Yes.
Correct? They would have borrowed 10-15 crore every month, ब्याज देना चाहिए, installment. By the time you get that 3-4% margin, your tongue comes out. So that is what the business today, in particularly MSMEs. Now, what are the few things that happens in a business? Sales grows, but cash is always tight. But all of you would have faced this. Second is good people leave. Hello, welcome. Good people leaving or quietly not performing. They may have the potential, but they don't perform. No clear picture of where profits are actually coming from. Suppose you have 3-4 product lines. Overall, you may be profitable, but you have no clue where the real profits are coming from. Unfortunately, in India, I'm a cost accountant too. So before I look at the financial statement, my mind goes into cost aspect of it. And breaking down the financial statement by a financial analyst, CFA, and all that, you can put all the model, AI will generate all of that. Who has got the metrics of how these cost drivers are working in each company? Because at the end of the day, every promoter says, sir, I lost this business for 2 rupees, sir. Somebody competed for 86 rupees. I quoted 88 rupees. So I lost 15 crore order. Now, this is where people have lost the concept of marginal costing. You have, but the problem is that 50% of my capacity is underutilized. But I'm not able to cover the cost. If I sell it 86, I will make loss. Now, this is where the challenge comes. As a cost accountant, if you're able to break down, and you have a chartered accountant from a solvent company, right? Am I right in saying this? If you don't have product-wise profitability and the capacity utilization, the basic metrics from the cost accounting perspective, you will never be able to do the business. Unfortunately, ICWAs are no longer available. Whenever I ask people, sir, ICWA capital, CMA, costing, or who is bothered, right? But most of the promoters, when they have an inquiry from a customer, 12 crore order, this is the price. Somebody has quoted, can you match? He immediately works out, put some 5% overhead, 5% interest, 5% this, and then he says, sir, not possible, sir. Because he's under pressure to take an order, because he has to load the capacity. His contract workers are there. Worker problem is also rampant in India. Everybody talks about unemployment, but everybody has nobody to work.
Yes.
This is the true fact across India.
Yes.
Whether it is Maharashtra, Tamil Nadu, Gujarat, anywhere. I remember I was on the board of a company, in auto company, and we put up a plant in Sanand. They don't want to work. So we have to get workers. But Tata Motors and Mahindra will say, no, we deliver 11 o'clock, your truck has to come inside with the product. How do you do this? Right? So we have a huge mismatch between the narrative, that unemployment, but actual job opportunities. Yesterday I was in a company in Nagpur. Sir, I need 150 people tomorrow. I don't have. Right? What do we do? So this is a huge challenge many promoters are facing. Because of that, you're not able to. Raipur is not different. I was also in a couple of factories in Raipur last year. Sir, we have no workers. You may have engineers coming out of colleges, ITA graduates, all of them, but they don't want to come. I don't know where. How do they make money? Because this is where the governments have made them lazy. They give them freebies, they give them everything. Nobody has the intention to work unless that is taken, addressed because we are going to lose a generation of working population. Which is going to, that is why then don't complain about AI, don't complain about automation, which will take away all your jobs. Then again, another narrative builds. Then comes the family businesses. Okay, in India, whether listed or unlisted, 80-90% of the businesses are family controlled. And family may you have brothers, family, all of them. If you don't have clear understanding that next generation has come in, the next generation doesn't want to be in the steel sectors are too hot. I don't like to be in a hot temperature, but I can see some youngsters here still in the steel business. But many of them don't want to be, or go into textiles. Sir, I get pollution, sir. This cotton yarn, the fiber, it is all very not good. I think I will ask my papa to give me 10 crore, I will do a startup company. Right? This is the real story, right? And the conflicts happen. Then the daughter gets married, and the son says, now, daughter, you gave already 20 crore to the bridegroom, and she is married. Why she should be a shareholder in the company? Remove, and then there is a family dispute happens, right? Then comes the consultants. So invariably, when there is a problem, the promoter says, okay, somebody will get introduced somebody and say, oh, he's a great guy, you should hire him. And then what happens? The consultants come, they propose beautiful report. The biggest problem is implementation. Everybody has got brilliant ideas. Who will go down the road and sit with your team, whether you are implementing a today issue? For example, one of your key member resigns one fine morning. You had no clue. He was with you for 20 years. How do you deal with it? You get emotional. How the hell you resign? I have taken care of you when your brother was sick. I gave you 10,000 rupees. All the drama will start. But you never realized, you never took care of your people. You took them for granted. It is like how we take our wife for granted. Older generation, not new. But at least the older generation definitely khana milega. Even if you fight, there will be food at home. And she will not eat until you go home and eat. That is gone. This is the corporate story today, right? You have to work alongside the teams. They will ask, sir, I don't have a CFO. What do I do? I go outside and I have outsourced a CFO who charges me 1.5 lakhs of rupees a month. He takes the tally output and he prepares everything and he sends some report, sir, I don't understand. But what happens? Banker says, I need a report. So banker he has outsourced a CFO and he has given the report. He has not understood what are the components of those reports, right? You have to transfer the capability. Mentor is a person who is not imposing what he has the experience. He is actually unleashing the potential within you. All of us have certain potential, but unless somebody tells you, hey, you look very good, you can do this. You have the capability to do it. Until then, he was losing confidence. Whether it is a promoter or whether it is his own production manager. Production manager that time also, sir, you don't know, sir, all the problems, sir. I work 6 days, 9 hours, 10 hours, sir. I don't get leave at all, sir. Goli kathar, sir. I was not having diabetes. I was not having blood pressure. But suddenly, all of this has come. Why? Because, sir, all orders are coming on WhatsApp, sir. What do I do? We have a system, but no salesperson is entering in the orders in the CRM. So it's coming on WhatsApp. My boss says it has to be delivered tomorrow morning. Right? So these are real issues which you have to handle. So you have to treat the company as something which is going to make it work. Because the day you incorporate a company, it is like human body. The moment you are born, it decays. Except timeline varies depending on each business model, right? Most important thing is cash flows. I still believe the Partha system was much more efficient, which the community, Marwadi community has even forgotten that Partha system. When I go to certain companies, they say, you had this Partha system. How much money came in, how much raw material came in, how much sales went out. At least, mota moti, I know I am not negative. But that is gone because the fancy finance industry started producing reports in every other way that you want. Right? Now we come to 5 key things what a promoter is stuck with. First is people. Now people doesn't mean designation. People doesn't mean you need stars. You need the system to be driven in such a way that people are able to perform better. Right? So you build the systems, not stars. Because stars are going to be your danger. Lot of startup companies I consult and mentor my board consult. Suddenly one partner leaves. Co-founding member, co-founder, all of that drama happens. Shareholders agreement gone down the drain, right? Valuation, everything is an issue. Second is customers. When I go to many small industries, I ask them, what is your customer attrition? People know people attrition. Customer attrition, sir, we don't, sir, we have 500, 600, sir. And I compare this, and suddenly you see 30-40% of the customers have not even placed one single order with you during the month, during the year. Then they realize we are losing customers. So customers have been good with you, but what happened with them? Why they didn't place orders? That means you lost your relationship with your customer. If you don't know the potential of the customer, so focus on top 25 potential of the customer. He is growing star. It's like SME company going into IPO. This can become a main board case because they are developing few things. So understanding the future potential of the customer is more important compared to going with the same old guy who gave 5 tons business every month, 10 tons business every month. And every month he is negotiating price with you. Because sir, somebody else from Nagpur giving, somebody else from Aurangabad giving. So there is a pressure all the time building on you. So you build customers which have got the potential. Then you grow with them and you make them work for you, right? Next is cash. If your finance guy cannot explain cash in 5 minutes, then you lost it. 5 minutes, if a CFO or an accountant does not explain what is your position, you don't need him, that means you have lost your business, right? Next is cost discipline. I talked about it. We forget cost. We include everything else and then we arrive at a cost. I consult a construction chemical company, they have 150 products. Everything standard, sir. No, 5 rupees per kilo, 5 rupees per kilo. It does not matter what processes those construction materials are going through. So cost discipline is very, very important, which is missed at SME companies because many SME companies have a tally system and it produces a report, but we don't have the data of cost center. We don't even know what is a cost center. Those days in the voucher itself, we will have cost center, profit center, and financial overhead chart of accounts. We don't have it now because the CAs have not been trained now in costing. The newer generation of chartered accountants have no basis on cost accounting. Because of that, lot of things are getting missed. The basic metrics are missing. And the promoter's mindset is, I have to drive this business. Don't be a doer. The promoter who has got great ideas, if you become a doer, you are destroying your company. You be an innovator, be an architect. These are the 5 things, remember, because next 2-3 slides I will finish it. How this is going to be very important. People, the customers, the cash, the cost discipline, and the promoter mindset, right? What we find when we go to a company, the day 1, lever number 3, because I take lever number 3, which is cash. You will see negative cash flow, supplier not paid for 150 days, 90 days, right? Promoter is infusing funds, sir, I sold mutual funds at a loss, sir, I had to put 20 lakhs, even I had to pay GST also. And he does not understand the debtors are made paid for 90 days, 150 days, but GST you have to pay. That money you never planned in your working capital system. Your profit and loss system says GST collected, GST paid. It is out of your P&L account even. But lot of companies, 1 crore, 2 crore for small companies is a huge hit. It is going unnecessarily sitting there as an advance pay. The debtor's rhythm is missing because we lost track of it. Who is following as a SME company, sitting with your accountant, every customer who has not paid you, overdue, what is the follow-up mechanism? What is happening today? The sales guys keep selling. The accountant starts following with the cash collection. There is no accountability between the sales guy who is selling and the accountant who will say, sir, every time I call, he does it, discourage me call because true caller mein aa raha hai, block kar raha hai, sir. Until the material reached, he was very, very happy. You can reach him. But the moment you ask for money, he is not there for you. Right? Outsourced to CFO. This is a big problem, right? Next is customers without ownership. What does it mean? 50% of the customer when you have attrition. You don't even know where the customers have gone. One of my good friend who is in business asked me, Sridhar, when do I know my product has matured? A simple question. I said, last 3 months have your volumes come down? But I've increased the price. Okay, sales remained constant, but volumes have come down. He did not notice that. Next is, if the volumes have come down, either there is a competitor or a new product in the market. Alternative product has come. So, in economics theory, our professors will know your product maturity, saturation stage, all of that has a variable. We forgot that. And suddenly we find customers have walked out. And walked out for what? Somebody called, sir, I need your quotation in 10 minutes or 15 minutes. The sales admin said, don't worry, I know the customer, I will talk to him tomorrow. By the time somebody has taken the order. You know, customers, when they start giving you 15 minutes time, that means somebody else sitting in front of him who is offering better rates. We are forgetting these small things which is affecting the business. By the time tomorrow you go, he has already given the order, right? Most of the companies have got CRMs, right? Power Play, BI, Power BI, all these ERP systems are there. But most of them, because WhatsApp, as much as the best innovation of the century, it is also damaging companies. Right? Orders are coming on WhatsApp and nobody takes ownership, right? Loss making, we don't even know which businesses are losing money. Now come to people side, right? Attrition. HR is the abused, sorry Lakshmi, HR is the most abused word in India.
Absolutely. That's why I changed sites.
I was in South Africa. Mr. Mandela, I met him personally twice. He said it was apartheid. How many of you know apartheid? Many of you. Some of you know, right? So he became the president and he said, Sridhar, we have whites, colored, Indians, blacks, create a rainbow board, rainbow management. And that is how we started implementing. I did not call it HR department. Lakshmi, I may request you humbly, change it to human asset department.
Yes.
The day you treat humans as asset, you will grow them. The day you treat them as resources, you exploit them.
Yeah. So I would like to first change the syllabus. What we teach, if we start changing from there, it will change in the industry.
Wherever I sit on the board, first thing I say, your appointment order should not be from HR department. It should be from HAD department. Right? The day you treat them as assets, because today machines can be bought, technology can be bought from anywhere. People are the only one who cannot get the right people that you need. So treat them as assets. Okay? Then leave policy. These are all very, very simple things, but demotivates people. Sir, we work all 6 days. I work on, the promoter says, sir, I'm here even on Sunday, sir. I said, don't be proud. You don't know the damage you are creating on your people. And one fine morning, LinkedIn may they go open to work. and the promoter does not even know. So when I used to go to a company, I asked who are the top 20 or 5 top guys. I look at their employee profile in the LinkedIn, open to work. I know where the problem starts. So I start cutting down. First thing I say, second and fourth Saturday, chutti karo. Annual leave 29 days, reduce karo 22 days. Sir, we have sick leave, casual leave. Arey yaar, bhul jao, that concept is gone. Government says now 8 days, not 7 days. 8 days, there is nothing called sick leave separately. Maharashtra Stop and Establishment as well as even the new labor code. And change your games, change your timings. Suddenly, and I did this exercise on Thursday in a Pune-based company. They were all 40% attrition, all of that. And the promoter, very good people. And I said, get all of them. I prepared 1-page policy comprising this. I told all of them, we will change it from tomorrow. Construction industry. He said, sir, it doesn't happen, sir. Office people different, site people different. Site we will do it differently. And the moment I announced it, one lady was being there for 18 years. She was in shock. I said, why you are in shock? I never knew this company will do such things, sir. This is a great news. Right? The game changes. Behavior changes. And all of them, and I told the promoter, now watch all these people who are put open to work, whether they removed it or not. Because behavior changes. At the end of the day, why are they going? They don't have time with their personal family. They can't spend time with them. They travel, all of that. Okay. Most importantly, a lot of concept of MIS, right? People produce MIS. Everybody says, "Sir, I get it at 9 o'clock." I said, "What do you do with MIS?" Sales fall down yesterday. Have you called the sales guy why he did not go to that customer, get the order he was supposed to get it? No, sir, I didn't. So watching. There are promoters who used to watch BlackBerry those days, emails on BlackBerry. You can run the whole management through BlackBerry mail. Those companies vanished. Today, you need to act. Unless you call them, understand why it has happened, right? When Ambani used to say, how you are able to increase sales every year 15, 20%, 30%. He says that the marketing guy comes from his trip. I don't ask him how much money he spent. I ask him how much money business has he brought. If you got extra beer, whiskey, so he's getting me $1 million extra business. Otherwise, if I tell him first thing voucher dalo, traveling allowance kitna hai, first calculate karo. Forget business what he has brought. The moment you do that, he will sit in Italy, he will go to no customer, he will enjoy, and he will say, "Sir, customer suddenly had a medical emergency, sir. He did not come back." This is unfortunate part of it, right? We don't have MIS which drives these metrics, right? Each function sits on its own island, okay? Top line targets, no granular understanding. Just give you what we did in a logistic company. Revenue, 42% in 1 year was losing. Annual attrition, 40%. Customer churn, 50%. Interest coverage, 3 times became 0.46. Direct customers, 0. The promoter said, "I am ready to shut shop." A construction chemical company, 30% of revenue was loss. Average monthly loss, 1 crore. Break-even point, they did not know. Supplier unpaid, 90 to 150 days. Sales discipline, what's up? Next is waterproofing company. Site supervisor, 100% attrition. Every year changes. Profitability order, per order, they don't know. Billing cycle, whenever we like, we will bill. And how do you bill? I get WhatsApp pictures whether the site is completed from the group. 60 sites are going. And this guy says, whenever I see this picture, then I will bill. Right? And there is no signed contracts. It's a verbal contracts, right? Profits don't show up in the bank, but it is profitable company. What about the profit? So what did we do? We changed from 32 lakhs loss to 29 lakhs profit. Debtor days from 90 to 41 days. Employee cost 36 to 33 per month, so 3 lakhs saving. Customer churn today down to 40%. Construction chemical company, monthly sales was 3.7 crore. We increased it to 5.43 in 6 months. Gross margin 25.5, 33.5. Product category change. We incentivize the sales guys. I asked them what is the incentive policy for the sales guys. 1 lakh guy, he will get 7,000 rupees incentive every month. I said it is his son's pizza cost. Literally. Why would he bother 7,000 rupees, right? If he cannot earn 40,000 rupees extra, then he is not going to do the job. We change the game, and this is what is happening, right? Net loss is down to 0.53. So 1.1 has come down to this. This is within 4 or 5 months of our involvement. Similarly, I don't want to take more time. I think my time is up. So what is important is the shift that matters the most, okay? The treatment protocol, what works, recovery. Each function defends its own numbers. The mentor concept is different from consultants. You make your own team responsible because consultant will come, consultant will go. If you don't build a sustainable business model of your own people developing these things, it is of no use, right? And then promoter takes a real holiday. Okay, it only works with the promoter. So the promoter does not need a report. They need to change how the business is run. Simple. This is where mentor comes into the picture. We are not consultants. We just sit with them, understand, and it is like Shankaracharya listening to all the woes of people. Then slowly they themselves will understand, sir, it's easy, sir. All what he needed was promoter at the top is lonely. He doesn't know who to talk to. He shows his frustration on the companies. So with that, I stop my presentation. Thank you. Any question and answer, we will address it in the Q&A session.
Yeah, if anybody has a question, we can take it up for 5 minutes.
Yeah, I'm okay.
Any questions? Yeah, there's a question.
Hi, sir. Sir, thank you so much for the very nice presentation. Just one question I had. So, going through the presentation, how do we ensure that the transformation we are talking about is from transactional, it becomes cultural? So, from what I understand is it can be a one-time thing which gets implemented and it has its impact. But many a time companies and over a period of time we see that they go back to the old practices and it is not a cultural shift, it is just a transactional impact.
Very good point. In fact, I mentioned it there, we don't walk away from that company unless it is sustainably, it is generating. We don't walk away. We are mentors. So we keep the promoters themselves walk back to the old story. In every week, if I sit with them and they say, okay, we will do this. Next week, when I am not there, he will go back to what he was doing. So what I do, I monitor the promoter performance in a small chart. You were supposed to do this, did you do this? I don't even ask the employees. It is the promoter who is making the same mistake. So sustainability is where I will not walk out of that place unless the person is transformed the way he runs the business. That is the key. We are not, that is why I said we are not consultants. We are going to be your personal physician unless you get out of that bad habits and come to a methodology. And I will also prove that you be away for a week. Let us see how the company works. That is the test of pudding. Every day morning 9:30 you come in, people will say salute and all of that is easy. But when you are not there, see, governance is about what? Are you doing the right thing when you are not even watched? It is same thing if you transform into the company. Does the company work even when I am not there? If that works, behavioral shift of the employee shift because there is a motivation, there is an employee involvement, and they feel that they have something much more to achieve in their life, and you have a growth path in the company. If that doesn't happen, you are absolutely right, it will become transactional. So that's why we change the behavior right from start. I start with the HR or human assets. If they have a huge issue, whatever you prepare MIS format, start pushing them, chasing them, it does not work because the heart is not in that business. So you have to understand, listen to them, and unleash their own potential. And we also identify in the process who could be stumbling blocks for you. We tell the promoter, even if you are ready, I had a situation a couple of months back, a HR guy says, sir, once in 3 months I can't give this report, it is a harassment. HR guy is saying to give a leave back to the employee of about 60-50 people to take the data, he feels it is harassment. I said he is behaving like a trade union leader. He is a dangerous guy. He doesn't know what he doesn't want to even give it to his own employees. The deduction that we have done to give it back to him. So you have to take out all of them are well qualified and all that, but you have given them that room. But if you don't treat your employees, when I walk into the company itself with when I say good morning, if they don't react, I know there is some problem with them. So culture, that's why I say, Divya said, sir, some company in Nagpur wants to have our mentorship. I said, first, that's all fine, let's go smell the factory. I went inside, you will not believe for 1.5 hours, sir, we have this problem, we have this problem. The amount of problem that we listed out the promoter, I realized, okay, we know how to deal with this. Sir, what can be done? I will sit with you. We will coach it in such a way that he will get, sir, when are you going to come? All you need is, it is like going to a lawyer or a doctor. It's okay, just we'll give some antibiotic, you will be all right. By the time you come out, you will feel all right. So we need to do that little bit of hand-holding then, and it becomes happen. Because sustainability is something, I am also ESG practitioner. If I am ESG practitioner, whatever you do, steroid doesn't work. Steroid will work only for a particular period of time. You need to put those behavioral system in the. See, organizational behavior is a huge subject which we have forgotten. Every organization has a DNA. That DNA has to be matched. 90% of the companies, they write vision, mission statement outside. Even the promoter does not remember, not even the CFO, not even the managing director of the company. That is a proof for me that they don't know. If they are not aligned to their vision and mission statement, what behavioral expectation you are expecting? What happened in HDFC, right? What happens in IndusInd Bank? What happens in all these cases? It is basically your values are there. Have you listened to that? Each word has to be defined. So when I introduce values and vision statement, not English, I go into define every word and I train them in orientation. Every employee should be trained the day they join why we are here. If they don't know why we are here, we don't want a coolie in the company. It does not matter what designation you hold. Anything else? Thank you.
May I?
Yes. Yes, Lakshmi.
Yeah, this is not a question, but to the audience, when we did this consulting project,
I don't want to name the company because I don't know whether they would like to, but when we did this project with Sridhar sir, this is the entire journey he walked through. When we did, he did, I think, 2 or 3 sessions of talking till they built. So the family was not coming to terms, then we brought them to terms. The first thing he talked is your process, your people, and this, meaning I just saw this entire journey happening, so I just wanted to acknowledge that part of it. Yeah.
Sridhar, we have 75 people online watching. So I think it's the place issue more than the event issue.
Great. So, after listening to Sridhar sir, I'm sure a lot of people, in the room and people who are watching us online, they might be thinking, okay, good, we are growing, we have, or we can set up a lot of systems and processes and sort out these issues. But the biggest challenge usually for a lot of companies is paisa kahan se aayega? And I think that's where, is the opportunity for people to see IPOs as the, very important vertical of fundraising for them. So we have Sandeep ji with us from Bombay Stock Exchange, and who's going to talk about, the capital markets, and he's going to take us the brief masterclass on capital markets, what the IPO process is all about, what are the criteria for getting listed, SME as a focus, but definitely he may touch upon the main board listing as well, because a lot of people, may qualify for the main board IPOs as well. So let me briefly introduce Sandeep ji for all of us. So Sandeep More is a seasoned finance professional with over 15 years of experience in the capital markets, a chartered accountant by qualification, and Mr. More completed his Bachelor of Commerce from prestigious St. Xavier's College. He's been integral part of BSE, Bombay Stock Exchange, and its group companies, contributing across various departments and playing a key role in strengthening operational inspection, business development, and regulatory frameworks for BSE. He is also known for his deep understanding of financial system and exchange operations with commitment to excellence. So we invite Sandeep ji here with us to share his thoughts on and take us, all of us through a masterclass on the capital markets. Over to you, sir. A big round of applause, please. I can't hear them. Okay, good. The energy has to be there throughout.
Good afternoon. Thank you, Dr. Murthy. Thank you, Divya, for inviting me here at Raipur. Raipur, if we consider the eastern part, is a very vibrant in terms of IPO potential that we all understand. So coming here, I was informed somewhere last week, but I did not miss this chance, and I did not want to miss this chance. And after hearing Dr. Sridhar, so you spoke like a doctor only. So
Business doctor.
yeah, so after hearing you, I have come to understand a lot of things. We come from capital market, so we understand the other side of the story once how the company get listed. But what is the background? I mean, how you make it possible? So this was one eye opener for me as well. So I will take you through this small presentation on small and medium enterprise. So we call it कि आपको अपना कंपनी को लिस्ट कराना है. So what does small and medium enterprise SME means? You are subject matter expert. That is what we call SME. So you focus on your business, give best to professionals and consultants. That's what we say. Indian MSME, the overview. So we have around 8 crore micro, small and medium enterprises in India. This MSME is the backbone of the economy, contributing 30% to India's GDP and 45% to India's export output and creating 30 crore jobs. This is how potential it is. Major challenges that is faced by MSMEs these days, the limited access to timely, adequate and affordable credit because of lack of collateral and lack of credit history. That is the general norm which is faced by most of them. Skilled labor shortage, as pointed out by both my previous speakers, labor shortage, skilled labor shortage, and difficult in attracting, even if they attract, retain them. That's a very big challenge that we face. And there is intense competition. Suppose you come out with a product which is very niche. As you start growing, you start facing competition with the bigger players in that, where you lose the edge. Right? The second most is the fear of disclosures. The promoters that we meet, they fear that listing कराएंगे, so हमें बहुत कुछ disclose करना पड़ेगा, which they would not want. That is the biggest fear that they have. And fear of dilution, of course. As sir pointed out, कि मैं अगर कंपनी IPO लेके आया, so मुझे हर चीज में क्वेरी कर सकते हैं शेयर होल्डर, इवन इफ दे होल्ड वन. आई मीन SME के केस में एक लॉट रहता है, बट इफ दे होल्ड वन लॉट आल्सो दे कैन क्वेश्चन मी, सो दैट दे वुड नॉट वांट टू आंसर बिकॉज ऑफ कोर्स ego, and they think that they hello
Yeah, that is better.
yeah. So which they think they are not answerable. Venture backed SMA face pressure of timely exit. What value proposition for benefits? So if your business has potential, for these are the points which are generally, for which promoters want to maybe come out with an IPO. If you have capital expenditure in plan, so and acquisition, if you have a similar line of business to acquire, long-term working capital, lower debt burden, So if you want to improve your debt equity ratio, banks cannot fund you to the extent you would want to, because your debt equity ratio is not up to the mark. So by diluting your stake, you improve your debt equity ratio, which in a sense will also allow the bankers to fund you more, apart from the IPO. If you want to have some research and development, where do you get your fund from? So all these aspects, incentive for employees, retaining, as sir said, retaining employees is the biggest challenge, quality employees. So if you come out with an ESOP, you might as well, promote employees to stay back and work for you. Company's visibility. Today, one company in Raipur maybe is known to people in and around this area. But if they get listed, they get media attention, social media, print media, and television media. So that company gets visibility across, which also helps in their business. Promoters get monetization opportunity for and liquidity for existing investors once it gets listed. So the main criteria on the BSE SME platform, you have to have operating profit, EBITDA, which we call, of 1 crore in 2 out of 3 preceding financial years. So the criteria is your business has to be 3-year-old. There is an exception, I would explain later. And out of this, 2 years with at least 1 crore of EBITDA in out of 3 years, 2 out of 3 years. The offer documents which is filed is with only the stock exchanges, unlike in the main board, which has to be filed with the stock exchanges as well as the SEBI. Here, underwriting is done by the merchant bankers, hard underwriting. So, whatever amount which IPO is brought for, if it is not subscribed fully, the merchant bankers take care of the balance. Application in terms of minimum application size, minimum 2 lots, not less than 2 lakhs. So this 2 lot has to be more than 2 lakhs. Why is this restriction? Because SME per se is risky business. So SEBI does not want the small retail investor to get into it. And minimum applications has to be 200 plus, which in the case of main board is 1000 applications. Reporting has to be done on a half-yearly basis. So basically, if you compare with SME main board and BSE SME platform and main board, which has the criteria, which gives you a practice pitch where you can come with an IPO and which will allow 3 years if you justify all the criteria to go on the main board. These are the eligibility criteria. The post-issue paid-up capital should not be more than 25. If you are planning for post-issue paid-up capital for more than 25 crore, it has to be on the main board. That's the first criteria. Net worth, at least 1 crore of net worth for 2 preceding full financial year. That's the second criteria. Net tangible asset should be more than 3 crore for last preceding full financial year. Operating profit, as I already mentioned, should be 1 crore EBITDA in 2 out of 3 preceding financial year. Track record. A company which has been formed, say, 2 years back, can it come out with an IPO? Ideally, no. The track record of applicant companies seeking listing should be at least 3 years. Having said that, if this company which comes out with an IPO has acquired, say, sole proprietorship business or a partnership business or an LLP, which has been into business for that much time. So then it can come out with an IPO, provided it's operating for at least one full financial year as that company. If no track record, then 3 years they cannot come with an IPO. Then the project for which IPO is being proposed should be funded by the financial institution, NABARD or SIDBI or the commercial banks. If they are funded by those institutions, then this 3-year track record is not mandated. These are the basic eligibility criteria. Other criteria. So once they have decided for coming on board, if the promoter is selling its own shares, so why do you need an IPO? Right? So SEBI has, over the period of time, made adjustments or change in the this process after the feedback and what companies have done over the period of time. So OFS, which is offer for sale, should not exceed, they can come, but should not exceed 20% of the total issue size. So total issue size, if it is 50 crore, the promoter cannot sell the shares of more than 20%. And promoter shareholding should be 20% will be in lock for 3 years. What is the purpose of IPO? One has to mention it in the RHP and DRHP. So general corporate purpose, it is mentioned. So this general corporate purpose, it has to be specific. Why the promoters are, bringing out this IPO for acquisition or general corporate purpose. So general corporate purpose has been kept at 15% of the amount being raised by the issuer, or 10 crore, whichever is lower. General corporate purpose cannot be more than that. These are all out of the experiences of SEBI that this has evolved. The repayment of when the promoters come out with an IPO, it cannot be for the repayment of loan to the promoter. You take public money, you pay yourself back. It is not for that. Repayment of loan from the promoter, repayment of loan from promoter group, and repayment of loan from related party of promoters. It is not meant for that. Then there is a monitoring agency. So if it is a bigger IPO in terms of SME, say issue sizes of more than 50 crore, excluding the OFS portion, then they have to appoint a monitoring agency, the rating agency, the CRISIL or the CARE or that kind of agency. Now, one good part about this is SEBI mandates for market making. What is market making? When there is a company which comes on the main board, if there is no liquidity, so if nobody is bound to give quotes, either on the buy side or the sell side. Sometimes we see that there is a buying circuit or a selling circuit. But in case of SME, market maker has to be appointed, and that market making has to be done for 3 years to give the investor entry and exit, easy entry and exit. So that is mandated by SEBI. And these market makers are brokers of the exchange, which will be there for 3 years. They will provide the bid and ask both on the exchanges 75% of the time during that. So which is being calculated. If they don't qualify for that, then it is cancelled. So probably if they are given warning and they will have to appoint more another market maker for it. This market maker also have to have a 1 crore net worth criteria. So once the company gets listed and it has lived for the 3 years journey, it has made inroads. So after 3 years, they have this option of migrating to the main board. But will all the companies of SME eligible to be migrated to the main board? No. They have to qualify these points. Say for example, paid up capital should be at least 10 crores when they would apply to the main board listing. 3-year track record with no pending non-compliance at the time of making application. During these 3 years, there should be no non-compliance. The average of 6 months market capitalization should be more than 100 crore, or this is or revenue from operation is 100 crore. So if they qualify for their revenue for 100 crores, then in immediately 3 preceding full financial year, they can qualify, fulfill this criteria. On the liquidity side, the at least 5% of the weighted average number of listed equity shares, weighted average number of equity share should be traded during the 6 months period. These are all because to see whether the shares are being cornered or provided to set of people. So these points are very relevant. Trading on at least 80% of the days during 6 months period. Third point, minimum average daily turnover should be of 10 lakhs. And minimum daily turnover also has been defined 5 lakhs during 6 months period. Minimum average daily trade also. So they have gone deep and minutely, segregating to make this viable, or revenue from operation. So this third number point and fourth number point, if the revenue from operation is 100 crore, so in the previous 3 financial year, it qualifies. And on the operating profit side, average of 15 crore on restated consolidated basis in preceding 3 financial year, with a minimum of 10 crore in each of the said 3 years. Net worth, as I said, 1 crore in each preceding 3 financial year. Net tangible asset remains the same, 3 crore. Promoter holding to be at least 20% during the time of making the application. Main board criteria is the number of shareholders, which is 1000, needs to qualify. No pending investor complaints and no audit qualification. These are the criteria for a company or SME company to migrate to the main board. These are few companies which has been listed on the Bombay Stock Exchange, which gives you an idea that what potential the companies have once they plans and prepares and get listed. So for example, Bondada Engineering, if you see, they listed in 2023. The issue price was 75. Issue size was 42 crore. Turnover at that time was 371 crore. Profit was 111 crore. Sorry, profit was 18 crore and market cap 170 crore. After listing, as per last month's report, the turnover has increased 1600 crores. Profit has increased multiple times, 10 times at least, 111 crore. Market cap 4000 crore. So if coming back to your Chhattisgarh's company, Manorama Industries, they are into food products. They listed in 2018 with an issue price of 188. 64 crore they raised. turnover during the before listing was 100 plus crores. Profit 19 crores. Market cap at that time was 209 crores. Just look at the turnover it has now. Turnover for financial year 25 was 770 crore. Profit 112 crores. So what it does for a company, the potential that it creates, the potential that the liquidity creates, and the potential that discipline creates in the promoter, which helps them build this kind of wealth. The basic BSE geographic distribution I would like to share. There are 717 companies which has been listed on the Bombay Stock Exchange. The first was in 2012. And among both these exchanges put together, we have 1400 plus companies. 717 at BSE. If you see the companies listed, it is spread throughout the country. More towards the Western India because they understand and they are more into capital raising part. So if we see Gujarat 200 companies, Maharashtra 211, Rajasthan 27, Delhi. And in eastern side, we have the maximum from the West Bengal, which is 49. And from Chhattisgarh, we have 7 companies which are listed. And if I am not wrong, out of these 7, 3 has been migrated to the main board. That means they have seen this journey, they have qualified for those criteria and have migrated. So this company is listed. So this at the time this presentation was made, it was 716. Now it is 717. The cumulative fund raised is around 15,000 crore, but the market capitalization today is 2,04,000 crore. Despite all the negative sentiments that we are having for last 1.5 years, that's kind of market capitalization that these companies command. And out of this 700, 200 plus companies have migrated to the main. Previous year statistics, 25-26. This slide I wanted to bring it to your knowledge that though the first company got listed in 2012, it is now because of the awareness, it is picking up and picking up fast. If we consider last year, 146 companies got listed out of 717, 18 that we have. They have raised 6,000 crore and average size is also increasing. Previously, we used to get 1 crore, 2 crore companies which used to come on our exchange platform. But now we have better companies to an average issue size of 43 crore, out of which main board migration, 9 companies have migrated last year. That's all from my side as far as the presentation is concerned. If there is any question, I will take it up, or maybe later we have question answer session.
What about the valuation of these companies which are listed on SME board?
Sorry?
Valuation aspect.
Valuation in the sense, you mean to say?
When they are going for the IPO, they are overpriced.
So I will tell you, the regulators has been very keeping up with hawk eye on that. Previously, they used, pre-multiple that they used to get was ranging from 15 to 40, right? Now, after this, what we may call as a massacre or SEBI getting on top of it, they do not allow companies to come out with more than 15. Having said that, if there is potential, but it has to be on case basis, which I think my senior colleague from the merchant banking side would be able to throw more light on. But we have seen that companies with multiple of 15 are getting through. But if you want a 13 P multiple, you have to have justification for it.
I was so we looked at the challenges or things which are deterring the SMEs or MSMEs to go in for IPOs. Since the size of the IPO is considerably smaller than the large IPOs, so I mean to say, let's say 20 crores, and the cost of the IPO, I mean, does that also have an impact if they see that the cost itself is 5 to 10%, if the IPO size is small?
Yeah, it does have, because if you want to raise a small capital, and I am not sure about the cost part, which merchant bankers will be able to tell. But if it is significant, I mean, amount of with the amount you have raised, then you might not as well want to go for it. It does have an impact. So that is why when we pitch or we reach out to companies for IPO, we see that their profitability is around 3, 4, 5 crores and above. So then we multiply it with the norm of the P multiple, so that it makes it viable for them after incurring those costs.
And also, sir, I think 2, 3 years back, when they got listed, the general trend was there was listing gain, and that was 25, 30%. That has tapered down, and now, I mean to say, post the listing, a lot of these IPOs they face a lot of selling pressure, and then their stock prices kind of. I'm talking from an investor perspective. So even if the market makers they are there, so they can ensure liquidity, but the price of the stock sees a lot of fluctuation.
So that is purely demand and supply. Today, if say good companies are available at 30, 40, 50% discount, so you come out with an IPO, right? And if you are not fairly valued, then these things will crop up. That is why we say that you should have valued your company very fairly, so that you leave something for the investors on the table.
Thank you. Thank you.
Thank you so much, sir. Can we have a big round of applause for Sandeep ji? I'm sure these checklists, the numbers, the criteria look little daunting, difficult to remember. But all this information is available on BSC's website. We all can go check, and then I think most important thing is cross-check, our numbers with those numbers. And once we see the gap, start working on that gap. It's possible. Some companies may not be ready today, but there's always a road to IPO. The vision of the promoter can be created, and that's where the entire ecosystem has to work. And that's exactly what the IPO readiness comes into picture. That even if you're not ready today, how do you make sure that your company is achieving those basic criteria, and when you are getting that entire ecosystem along. And I'm sure there are a lot of the consultants or even the advisors available locally, who can help you reach out to right ecosystem partners. I mean, like the Bombay Stock Exchange or Mentor My Board, Indorient. We all are here to support. Now, a very important the point here is that IPO readiness के बारे में जब हम बात करते हैं, the statistics, as the criteria look little difficult to remember. So what we've done is we've created a very simple Google form which will give you those criteria and help you to see your parameters of your existing company's financials to match up, and then see that what is the readiness score. So we'll come back to that when I take more details But I think it's already around 1 o'clock, and we should break for lunch, and then we come back again for very interesting, interactions. We will have interactions with, representatives of Manorama Industries, Ashok ji and Deepak. We will have a very interesting, interaction with them. Soumya Padhi is the founder of Indorient, and he's going to tell us, exactly what the investors look at, how, do you create that entire journey pre and post, so that the market cap, the valuation, how does that number game happen? He's going to talk a lot on those things. I'm going to talk about on governance, because I think the biggest differentiator between good companies and not so good companies is the differentiator based on the corporate governance, how the culture, the governance ecosystem of the organization is standing strong. I mean, there might be challenges because ultimately we all are humans. But is your governance so strong that it can, absorb the shocks which, keep coming in the businesses? I think that's where I'm going to talk upon that. And then, we will be closing up with a lot of questions. So keep all the questions ready, though we had few, questions here. But I think that's how the flow goes forward. We will break up for lunch for 30 minutes. We started little late because a lot of people, came late. Again, considering the distance here at ITM, University campus. But a big round of applause for all of us who are here. At the same time, all of us who are watching us live. We will continue, the session post, lunch. And till then, yeah, thank you. And yeah, let's have lunch, and that's where opening up your questions, keep talking, keep interacting. Networking is something what's the way. Thank you.
रिज्यूम करेंगे जल्दी से नहीं नहीं एंड करेंगे तो दिक्कत ठीक है कैसे होता है
नहीं बोलो